What should we take away from what we found out about the Fed's intentions this week?
Well, I think that really what's happening is the markets are digesting this new interest rate regime, if you will. However, we have to remember that volatility is really elevated, and it has been, I think, for the last 2 years. If you just look at realized volatility or realized vol, it's extremely high. And so I think that we have to just take that like sand on the beach. It's going to be volatile for a while, especially as we confront this recent surge in the COVID pandemic and these rapid shifts in monetary policy. So it's going to be volatile for a while.
Yeah, Chris, now we're talking about the Fed, and then we see the 10-year go below 1.4 again because, I mean, we saw cases double in some areas because of Omicron. So, I mean, do we look stupid talking about the Fed when this is happening all around us, and that may be what's really causing some of this?
Well, I think the Omicron part is certainly a factor in terms of rates, but I think at the end of the day, the driver for long rates is the expectation either that the Fed would be able to manage a soft landing or we will end up in a recessionary environment. So I think that really is the critical point. For the longest time, we have been dealing with a situation where Fed really was not on the back foot. Right now, they are because of inflationary conditions. And what the markets are discounting today is that they will be able to manage a soft landing. So I think my expectation is at some point a risk premium gets built in because of the inflation uncertainty, especially because what we see in the pipeline from an inflation standpoint, and then we take that out. So the outlook is, Valerie's point is a good one. The outlook is for high volatility and perhaps a very treacherous market. And I think what investors should do is really manage their risk just as much as looking for big upside.
Valerie, you point out that inflation isn't totally a monetary phenomenon. There's a lot going on that are beyond the Fed's control.
Exactly. So when we speak to the CEOs and CFOs of large U.S. companies or global multinationals, they're talking about supply chain disruption still, and they're also talking about wage inflation. I know we just had this great news from General Motors in terms of their ability to deliver electronic vehicles, but GM has also suffered because of the chip shortage, as have most of the automotive manufacturers. So we still have a lot of supply chain disruption, and I think that is also driving inflation, particularly in certain sectors of the economy.
You think year-end has anything to do, all the big gains in tech, Valerie, for some of the volatility in tech?
Yeah, I do think that people are trying to take some money off the table. I think that certainly by the end of the year, particularly for clients who are tax sensitive and they have uncertainty, speaking of uncertainty about the future tax policy, people may be trying to take some gains this year, not sure how those gains will be taxed in the future.
Kristen, in 30 seconds, is 2022, just in terms of the underlying economy, if we get, Dr. Scott Gottlieb said this could be a short wave with Omicron. It's moving so quickly. If we get that out of the way, will it be a good year in general for the economy, Krishna?
I think from a growth standpoint, certainly we have enough momentum going in for it to be a really good year. Not as good as 2021, but definitely a good year. Having said that, I think the risks around that are significantly higher in 2022 than 2021, and that's what people have to be mindful of.
Shepard Smith here. Thanks for watching CNBC on YouTube.